Welcome, Mr. Denome, and welcome to this crypto update. Over the last couple of weeks, I have told you guys that it's likely that Bitcoin will go back into this trend line here. And on Friday, we finally got 113k Bitcoin, which I have been sharing on this channel for many weeks already. And on Saturday, the dip continued to 112k, and on Sunday, we finally got that pump back to the upside. So this low coincided with this previous top. So technically speaking, this would be the perfect time that Bitcoin would go back to the upside. But obviously it's not going to be that easy because this week looks quite scary. So I will explain all the FUD that we have for this week, and there's a lot. And if Bitcoin can survive one more week, then I think we can get to 130k by the end of August or start of September. But we have to get through this week. So what is wrong with this week? The problem this week is obviously the President of the United States once again. So he is making new threats to Russia, and he has now been talking about nuclear submarines. So what happened here? I'm not going to get into the details. I think many of you already know, but I think most of this is just rhetoric. It's a diversion of what is happening in the United States. So what is happening in the United States is the jobs data were changed. So previously, the jobs data coming from the United States supported the idea that tariffs have been great and more jobs have been added in the economy. But now a new report came out that showed that on May and June, there were actually 258,000 jobs less created than previously estimated. And for this, the person in charge of the statistics, the head of the Department of Statistics, was fired by Donald Trump, which is probably fitting because this is a massive blunder. But I think it shows that the tariff policies haven't actually been as good as Donald Trump has tried to make it look like. So I made a video about Trump's tariffs a couple of days ago. You should watch it to really understand how the tariffs actually work, not as they should work, but what they actually do. And in that video, I showed you guys this chart, which shows the amount of jobs in manufacturing. And I told you guys that since tariffs were implemented in April, this has gone down for 2 consecutive months. And now we have a third consecutive month that the amount of jobs in manufacturing have continued to go to the downside. Now, if markets actually get wind of this, that the tariff policies are actually bad, it will obviously crash the markets. The flip side to all of this is that the odds of a September rate cut have surged to 75% after today's labor market data by this betting market called Kalshi. So why would the rate cuts surge, the chances of a rate cut surge to 75% after a labor market data? The answer is because it's likely that the Federal Reserve will come in and intervene in the markets. And whenever they intervene in the markets, give some relief to the companies, lower interest rates, that is usually bullish for the stock market and bullish for crypto as well. And the annoying part of this is that we don't know when they will announce this. If it will come in September, that means there's plenty of room for more fear to creep into the markets. And if fear creeps into the markets and markets dip from these levels even lower, then it is even more likely that the Federal Reserve will step in and do some kind of intervention. So there is a lot of room to go further to the downside, unfortunately. And when we take a look at Bitcoin and the stock markets, if we lay out these two on top of each other, let me pin this to the right scale here, you can see that these two assets are basically interlinked as of now. And so whenever the stock markets goes up, Bitcoin goes up, stock markets go down, Bitcoin goes down, go up, Bitcoin goes up, stock markets puke, Bitcoin pukes, stock markets go up, Bitcoin goes up, and most lately, when stock markets went down, Bitcoin went down as well. So if the real world markets are bearish on Monday and Tuesday, then it's likely that Bitcoin will also puke to the downside. Now, eventually, Bitcoin will decouple from the stock market once again, but because lately it has been so in sync with the stock markets, it's likely that it will continue to be in sync, especially when there's a sudden shock in the markets. Now, as of right now making this video, we have the stock market futures which are currently live, and they are giving us a small pump to the upside. So maybe Monday will not be that bad after all. So if Monday is good, then we can basically sigh from relief. But then we have the end of the week. And by the end of the week, we have the Donald Trump's threat coming into fruition. So Donald Trump has threatened Russia's trading partners, mainly India and China and others, with a 100% extra tariff if they continue to buy Russian weapons, if they continue to sell into Russia, and if most importantly, if they continue to buy Russian oil in the future. Now, this threat originally was supposed to come in 50 days, then it was revised to 10 to 12 days. So on Thursday, Friday, or Saturday this week, this threat will expire. And either he will do something stupid or he will not do anything. Those are basically the only two options that I can see, even though many Trump believers say that this is part of the art of the deal. He's masking his moves, he's accelerating timelines. This is a 4D chess. I don't believe that anymore. I don't believe he is that smart because when we talk about India, India has 1 billion people, and they already said that they have to buy Russian oil because there is no substitute. If they starve their citizens of basic necessity, mainly oil and fertilizer and food, which is coming from Russia, how can they expect the public to just go along with it? Obviously, they will not. And if they would do that, then the 1 billion Indian people would start to bid on the same oil that is currently going into Europe and going into America. So we would see massive, huge price spikes in oil. And that would still not take the Russian war machine down, because then Russia would continue to sell oil to some of the countries that will not do something stupid like that. And they can still sell Russia through black markets. And when the price of oil, if it doubles or triples, Russia would still continue to make money. So these threats are empty. They mean nothing. They are silly. They are stupid, in my opinion. Sorry for not being professional on this segment. But anyway, Trump is still has this looming threat, and he's basically backed into a corner. And right now, Steve Witkoff is in Russia trying to negotiate with Russia for some kind of a face-saving deal, I believe, with Russia. So Trump could back down from this mess that he himself created. And personally, I don't think Russia will bend into anything, because they would rather see Trump embarrass himself on the world stage again of his own doing. And there's really no reason for Russia to give any concessions, because currently United States is unable to force its will on top of Russia. So Russia basically has an incentive to not do anything. So most likely this threat will be a nothing burger. But in case it is something extremely stupid, I do have to say it out in this video, because we know that the real world economy and the real markets are currently entwined with Bitcoin and with crypto assets. So if he does something stupid, then our assets will likely puke as well. So that is coming either on Thursday, Friday, or Saturday. So if unfortunately, I would like to say that no, this is all bullish from now, and now we will continue to go to the upside. But what you may want to do is to wait out this week, completely. And by next week, we will probably have broken out of this short-term trend line here. And when we are above this here, then I think it's gonna be a safe zone based on the events in the real economy. Now, there were a couple of other news that I will quickly go through. Then we will look at the fundamentals. And the first news is that Jim Cramer has said that I despise both August and September, just tough months to make money. And usually the inverse, Jim Cramer, is true. So August and September might actually be good months. So even though we might get a shock this week on the markets, I think they are gonna go back to the upside when the expectation of the rate cuts will come to the market, and also when uh, the uh, American, the USA will make moves implementing all of these crypto assets part of their strategic reserve, and all these things will come out basically by September or October, staked Ethereum, all these things. So I think by the end of August, everything will be bullish once again. But this week, maybe even, well, could be next week as well, we could see some shocks here. Anyway, continuing, Lido Finance had some good news. So they have partnered with Caladan, which is an institutional level OTC facilitator. So now you can use staked ETH as collateral for institutional trading. And that is great, because would you rather have Ethereum as collateral, or would you like to have staked Ethereum as collateral, meaning that you can earn yield while you have Ethereum on your holdings? Obviously, many people would like to have yield while they passively hold uh, assets. So if staked Ethereum is a collateral asset for institutions, that is obviously great. I did ask this question, does this mean that staked assets could become tradable on regular exchanges too? And I believe this answer will be no, but I just wanted to ask it anyway, because they don't really want you to make money. So you cannot have a staked Ethereum as collateral, but institutions can. But I hope it would. That would be very, very nice. But this is still more use cases for Ethereum, more use cases for staked Ethereum, and this also further solidifies Lido as a institutional project. Then we saw acquisition from Metaplanet, 463 Bitcoin worth $53 million. This is much less that we have seen previously. We saw $100 million, even $200 million on a weekly basis. Now only $53 million. Then Michael Saylor is likely to buy this week. Again, I don't know how much, but we will see. On the ETF side, here is some bad news. So we saw an outflow of $800 million on Friday, which was just a massive panic, as you can see here. This amount of outflows from Bitcoin ETFs, basically only time we saw more outflows was when Bitcoin went to 100K, and then eventually it dropped to 78K. So if we see something like that, then this could be beginning of something much worse than just this dip here. So this is another warning sign. On the Ethereum side, we did see a outflow of $150 million, less than on Bitcoin side, but still basically, as you can see, the wind is being taken out of the sales as of now. We're seeing dwindling numbers of inflows, and now on both Bitcoin and Ethereum, they have turned into outflows. So it doesn't exactly look like uh, that this momentum will flip back to the upside immediately. So there might be still some spillover for this week and perhaps even next week as well. So this would coincide with my idea that maybe this week will actually be continue to be bad for Bitcoin, and then maybe next week we will finally get some upside once again. Now, going into the sentiment here, there's one chart that I do want to show you guys. Well, a couple of them. First is the supply of Bitcoin on exchange reserves. This has flatlined here. So previously we saw continuous outflow from Bitcoin exchanges into the hands of investors, but now it is flatlined, and that is not great because the overall short-term trend has steadily gone up here. And when Bitcoin is entering exchanges, that usually means that they want to sell their Bitcoin and not hold it for long term. So this is also a little bit worrying to me that Bitcoin is not looking as strong as it obviously did here when Bitcoin was starting to leave exchanges at these lows. And then another a little bit worrying signal is when we take a look at the amount of stablecoin market cap. You can see here that the current stablecoin market cap is $229.6 billion, and a week ago it was $229 billion. So previously we saw roughly $2 billion worth of stablecoins being minted on a weekly basis. Last week we only saw $500 million of new stablecoins in the market, which is again a clear slowdown. So that is obviously not great either. On the redemption front, we are not seeing much of change. About the same amount of Bitcoin, of old Bitcoin, is moving on the blockchain as we saw before. But if we actually zoom out, these are actually quite high amounts of blue color here, which is the wallets that have held Bitcoin for more than 3 years. So even though on the short term it doesn't look like much, in the long term view, this is actually quite old Bitcoin, which is currently being moved. So profits are being taken off, and that we can also see here on the realized Bitcoin market cap, which continues to go to the upside, which means that people continue to take profits into out of Bitcoin, despite we're seeing all of these massive inflows into Bitcoin on a continuous basis, but also people continue to redeem Bitcoin that they have held for a long period of time. So warning signs are there. I don't know if you should act on it, but I'm just warning you that this week could be quite dangerous. On the flip side, looking at the liquidation heat map for the short term, most of the liquidation liquidity as of now is on the top side here. So all the way up to $123,000. This is the major liquidity zone here because we already got out of the $113,000 liquidity zone already. So it's likely that we go to this area at some point in the future. We're not seeing a lot of liquidations uh, uh, basically piling up above this price range here, which is interesting to me. I don't know why all of the liquidation liquidity is basically stopping at 123k, but that is the case. So it's likely that we tag it at some point. And below us, we do have a couple of liquidation zones here at 103k. This is one big area here. And then we have here 97k, change it to 6 months. And then there should be one at about 91k as well, right about here. So this liquidation zone, this is basically the only area where we still have an open CME gap as well. And below 91k, we don't have any open CME gaps to worry about. So if Bitcoin really has a good massive move to the downside, then I believe 91k or 90k is probably going to be the strong area of support, because that is the last area of a CME gap. So we will see where the markets go this week. On the aggregated spot order book information here, we did saw a massive amount of buy limit orders entering the exchanges. So we saw a delta of $180 million on the spot markets. On the futures markets, we didn't see that much excitement for buying, but usually spot markets dominate the markets, so it was likely that we got a move back to the upside. As of now, the markets are pretty much neutral. We're not seeing buy orders or sell orders overtaking one or the other. So the markets are basically, as of now, undecided on the limit order side. So in my opinion, I don't know if this move that I had laid out before, if this will actually play out, because Trump's move this week could really take the markets down. And if the real world markets go down, then it's likely that Bitcoin will go down with it. So I'm advising caution as of now. I'm basically giving 50-50 as of now if this will break or not. Monday will give us the first clue, and then most likely if the markets continue pushing to the upside throughout basically Tuesday, Wednesday, then it's likely that the shock of the at the end of the week will only take us to this level. But if the markets continue to go down here, then I think it's insiders knowing what is about to come and they are exiting their positions, and then it's likely that we go further down that week as well. So that's basically my analysis for you guys for this update. And I hope nothing crazy happens this week, but who knows? Let me know in the comments what you think of this analysis for this week, and I will see you guys on the next video. Thank you and bye bye.